Hey guys, TommyBryson here, and today we're going to break down 3 types of investment you can make right now to basically try to go out there and make some quick money in 3 different industries in a sense. And by the way, usually whenever you're trying to make some fast money, it usually has a higher potential of risk, okay? So although you might make a lot of money, the point is you might be also risking a lot of money. And by the way, I also invest into one of these industries and I also made a lot of money also, but the idea is I invest for the long run, and that way I can minimize my risk, and that's why I invest the way I invest. However, I post videos on this channel, guys, every single day, so make sure to also subscribe to the channel and hit the bell so you get notified every time I post a new video, and on top of that, also destroy the like button. Now, without further ado, here is the first industry I want to tell you guys about, okay? And that is basically the indoor entertainment industry. As we all know, anything to do with indoor, a lot of people, crowded areas, has basically been shut down in a sense for a while temporarily until everything goes back to normal. And right now, although the economy is kind of like opening back up, in reality, it hasn't opened up back fully. And in a sense, for example, here are 2 companies that basically are like very high on the top of like, hey, indoor entertainment. You have, for example, AMC and also Dave and Buster's. And the idea is, okay, with everything that went on, these companies lost a ton of money in revenue or potential revenue, and also in potential growth, because basically no one is allowed to go to the movie theaters, no one is allowed to go to Dave and Buster's, and it still hasn't recovered whatsoever. Let's just be honest. And even once things go back to normal, let's be honest, are you really going to put yourself in that area like in the first like 3 months? The answer is probably going to be like, no. You're probably going to give it a while longer. So it might take a while to actually recover. But the point is, in a way, it is still quick money, like short term, because basically it's not like 5 years, like 4 years. It's a lot less than that. So in reality, you can still make some money. So for example, when I talk about AMC prior pre-pandemic was at around $7 per share. But I do have to mention that although right now it is at around like $5 or so, and you know, at its lowest point it was at around like $2, the answer is, you know, guys, AMC has been going downhill for a very long time. Okay, if you look at the stats, it's been going downhill and downhill and downhill. And why? Because basically of the competition. Okay, you have, for example, Netflix, Amazon Prime, and on top of that, you even have Hulu, and you also have like cable in a sense that's actually trying to get in the game. I don't know why, but the answer is the competition is actually driving people away from like, hey, I want to go to the movie theater. Like, no, not really, not as often, you know. So the point is, it's an industry that although it was affected, the question is, do I want to invest now and hold on until recovery, or basically do I think that, hey, this entire thing that just happened right now just sped up the process of them just going downhill fully? Now, that's the question you gotta ask yourself. And people were talking about like, hey, you know what, Tommy, Amazon might actually buy AMC and create like an Amazon Studios type of thing. In reality, they backed out of that, so we still don't really know. So the answer is, okay, it is a very risky investment, and if you invested back in March, you would have made a lot of money, like double your money. But the answer is, like, going forward at $5, you're still like overvalued. Are you going to invest now and wait, see what happens, or basically stay away from it? The answer is very risky, but a quick way to make money, or basically a quick way to also lose money. If you ask me, I'm not going to invest into AMC. I'm just saying. Now, the second one is basically Dave and Buster's. Now, as you guys know, Dave and Buster's is very popular. People go there all the time. But no one, at least AMC, can make money like from like on-demand movies and stuff like that. But you know, you don't go to Dave and Buster's online and play there, right? So the answer is Dave and Buster's has been like out of luck for a while now, because basically all of their revenue, well, most of it in a sense, comes from like, hey, indoor. And if no one is indoor, well, how are you supposed to make money? The answer is you're actually not going to make money. And that's why around February, pre-pandemic, it was at around $40 per share. And today it is at around $16, and it's actually gone a lot lower back in March. But the answer is, if you believe that, hey, you know what, Tommy, in 2 years or so, everything is going to go back to normal and the share price is going to increase and they're going to make more money, more revenue, and the intrinsic value is also going to go up. The answer is, well, right now might be a good time to invest, because basically it is at around more than a 50% discount. So if you buy now and you hold on for a while, you might make a lot of money. But the point is, okay, I just want to say one thing also, you know, some companies, although it seems like, hey, everything is going back to normal once the country opens back up, the answer is, a lot of people will not be going to these places for a while. And, that could actually extend the amount of time they go without any revenue, which could cause them to actually go bankrupt like fully. And then that is the real risk that you actually run. So be very careful when you think about like AMC or, for example, Dave & Buster's. And by the way, although I'm mentioning AMC and also Dave & Buster's, they're actually not the only companies out there that are suffering right now. Let's be honest, there's a lot more out there, but I just wanted to focus on those two because they're probably like the most popular ones that you probably will know right now. And also, a great way to basically keep going while everything goes back to normal is probably to borrow a lot of money from like private entities, but then again, they'll probably sell some of the company, which might not actually be good. And also another option, not as popular, is to probably just file for Chapter 11 bankruptcy, which basically means you restructure all of the debts and pay it off during a certain amount of time, and that would have time to recover and also pay off that debt and don't really like fully go under the rug. But that's like more for like Dave & Buster's. Like AMC, I just don't know. I don't see any like, if you ask me, Tommy, do you think AMC is gonna be here in 20 years? The answer is probably gonna be like, no, I don't think so. Okay, maybe a form of it, but I doubt like AMC as a whole is going to be here in 20 years. But I don't know, guys. Comment down below and let me know, what do you think about this? Okay, do you think that AMC is going to be here for a long time? Dave & Buster's, probably. People always want to go out, have fun, and share a beer, play games with friends. They'll probably like reiterate games, stuff like that. But the answer is AMC. I just don't know. Comment down below and let me know. And now, guys, the second and third industry are probably like all combined because in a sense they're all kind of like put together, and that's basically airline, cruises, and on top of that also hotels. Like those industries, like they're all in the side of the travel industry, so that's why I'm putting it like right here, like as a whole. So second industry and third industry are right here. Okay, so basically, if you notice, for example, airlines and also all of these industries right here have been affected a ton because basically travel is not a thing currently, like at least like internationally, and as frequent as it actually used to be. So for example, when we talk about, for example, the airline industry, they're operating around a 20% capacity. So in reality, they're losing around 80% of their normal revenue. And on top of that, the volume is a lot more different. So as many people that they used to have coming in during these times are actually not coming in right now. And the idea is, for example, you have Delta, United Airlines, and also American Airlines, the three big airline companies. Well, all these companies right now are suffering a ton. And the idea is that although they got a bailout from the government, that might actually not be enough to actually carry them along for a while. Because again, we don't know exactly how all of this stuff is going to affect the human psyche of like, hey, do I want to travel outside of America? Do I want to go out there and basically go on vacation? Do I want to stay in a hotel? The answer is we don't know the long-term effect of how that's going to affect things going forward. Okay, so we have to think about that also. Now, the idea is this, guys, okay? It wouldn't be the first time, for example, an airline goes bankrupt, Back in 2000 or so, United Airlines actually went bankrupt themselves, and they actually took around like 4 to 6 years to recover. And once that happened, well, they just bounced back up because basically it's a pretty good brand, okay? But what I'm trying to tell you guys is this, okay? Just because a company goes bankrupt does not mean it's the end of all, okay? Although it depends on the type of bankruptcy, because in reality, Chapter 11 is just restructuring the debt, okay? But there are types of bankruptcies out there that basically mean like, hey, we're done. I'm sorry, doors closed. That's it, it's over. But the point is, if one of these like big airlines goes bankrupt, Chapter 11, restructure the debt, and then basically take some time to actually pay it off, the answer is, in the long run, it doesn't really matter that much. And I can tell you that because basically, history shows when United Airlines actually went bankrupt, they recovered in like 4 to 6 years. And if you ask me, that is not that long of a period of time. And on top of that, airlines are very important also to the United States economy and also probably the world economy. So you also have to keep that in mind when you talk about like, hey, will airlines be here for like 10 to 20 years? The answer probably gonna be like, yeah. Okay, yeah, they're probably going to be here for a very, very long time. And also, some more industries that right now are still kind of like suffering are basically, for example, the cruise industry and also, for example, the hotel industry. Like, for example, the Carnival stock, the Marriott stock. The answer is a lot of these stocks are basically right now like around 50% off. And the answer is, if you think that, hey, you know what, Tommy, in 2 to 3 years or so, things go back to normal, people will be traveling. The answer is right now, it's probably the best time to buy because basically you're buying at a discount, a massive discount. But If you think like, hey, Tommy, no, these companies are going to forever go bankrupt, the answer is, do you think so? Like, what do you think would happen to the US economy if, for example, all the hotels went bankrupt, the airlines went bankrupt, and also the Carnival like stock went bankrupt also, okay? Like, all this travel stuff is very, very important when it comes to the US economy and also as a whole on a global scale. So the answer is, it might be in a way too big to fail, but we still don't know, because too big to fail, you never know which one is going to go down. To set an example, for example, in 2008, when they let one of the companies actually go bankrupt, and they actually rescued all of the other ones. Okay, I think it was the Lehman Brothers. So the answer is, you don't really know what's actually going to happen. But the point is, you have to be careful, and you also have to analyze the companies and make sure you're investing into the right ones. But overall, guys, the whole point of this video right here is to show you that right now, a lot of industries, and more than I mentioned here, are actually right now going through a hard time. And the best time to invest is usually when good companies are going through hard times, and that way you can buy at a discount, hold on, and basically make a large profit. For example, back in 2008, a lot of banks went down in value, okay? And now if you held on for a very long time, like 10 years or so, well, you would see that, hey, I made most of my money, okay? And that's the entire point. So the point is, you want to look for solid companies. And the great way to analyze companies is by getting this book right here called The Intelligent Investor. It teaches you everything about how to analyze a company. Here's that book right here. And also another book about stock investing or index fund investing is basically The Little Book About Common Sense Investing by John C. Bogle. And here's that book also. And by the way, if you want these two books right here for free, I have a link down below for Audible. And when you sign up, you get 1 month free, 2 free books. And even if you cancel, you still get to keep the 2 books. Okay, so again, link down below. But guys, I do have a warning, okay? Here's a warning. Do not forget, although some companies might go bankrupt and easily recover with Chapter 11 bankruptcy, don't forget, for example, about Radio Shack. It went bankrupt, never came back. Don't forget about Circuit City. It went bankrupt, never came back. Do not forget about Blockbuster. It went down, it never came back. So the answer is, it is possible for companies to go bankrupt and never come back, especially big brands, okay? So although it might be rare, it does happen. So always make sure, analyze the core financials of a company, understand the cash they have, the revenues they make, the earnings, the growth, and then that way you understand, hey, it's a good company, it's going to be just fine based on the data, and that way you know exactly what you're doing. But do not go out there and gamble your money away by risking it. Be very careful of that, okay? I don't want you to lose your money whatsoever. But guys, as always, comment down below and let me know also, what industry did I miss? Comment down below, let me know. And also, guys, before I go, make sure to also smash the like button, subscribe to the channel, and hit the bell so you're notified every time I post a new video. On top of that, follow my second channel called The TommyBryson Show. I post there every single day also. And follow me on TommyBryson. And before I go, if you want to watch a video on my full stock portfolio, well, here it is right here. I'll see you tomorrow. Thanks for watching, and as always, peace.